the Canada Sales Congress Industry Panel. I'm Matt Bell. Alongside me is Donna Glasgow, the Editor-in-Chief of the Insurance and Investment Journal, and we will be chairing the discussion today.
Oh, thank you. Rather than touch on all the issues that were already covered, which are all excellent, I'll just talk about one issue, and the issue that concerns me the most is where our distribution system will be 5 or 10 years from now. One of the things that a lot of the analysts are saying is that roughly 50% of our sales force are around age 59 or older. If 10 years from now we see a situation where they're all either out of the business or inactive, our sales force could be half of what it is right now. I took a look at some statistics, and currently there's 266 agents per 100,000 Canadians. There's 226 doctors per 100,000 Canadians. If our sales force dwindles the way that it's being predicted, we're going to have 132 agents per 100,000 Canadians, and because of the way they're managing the medical profession, there will still be 225 agents or doctors per 100,000 Canadians. That means that a life insurance agent will be far harder to find than a doctor. So I've already sent a letter off to the Wildlife Society to make sure that they put life insurance agents on the endangered species list. So fundamentally, my biggest concern is how are we going to fill that void, and who's going to fill that void?
Thank you.
I'd just like to add to that. If we take a look at the way products are purchased now compared to 10 years ago, for millennials and I believe even a lot of baby boomers, their first point of entryway to think about something they want to buy is to go on the internet and do a bit of research. I think that is going to be a significant part of where things are 5 years from now. The question is what happens after that? As more and more advisors and companies develop a digital draw or digital footprint, consumers are going to get a chance to go from doing research to execution, and I think that's an entry point for advice. I think, as Jim said earlier, in the more commercial markets, high net worth, the entryway will probably be through the business relationship more than it will be through the internet. The key issue here is where are the consumers going to gather in terms of their purchasing activity? Advocates did a study a couple of years ago in which they categorized customers as being possibly self-serve, assisted, or their third category was dependent. In the high net worth market, it's often a dependent relationship. The advisor is really looking after a wide range of issues for the customer. The question is, on the entryway into the internet, how many of the millennials and others are going to go the self-service route? How many are going to go the assisted route? Another advocate study showed that 93% of consumers, when polled recently, felt that advice was either essential or very beneficial. The question is, how do we make sure we give the entryway for that new buyer to acquire advice? I'll start it off. I mentioned it earlier. I believe that the biggest challenge is to understand how to use the internet as a prospecting tool. If you take a look at the way advisors acquire clients, there's referrals or warm leads, and there's cold call prospecting. Back in the old days when we had the career system, agents would get on the phone and we do something called dialing for dollars. They make 10 calls, get 3 appointments and 1 sale. We're not allowed to do that anymore, and the internet is probably now the harvesting method for those cold call prospects. So I believe that advisors need to develop a digital draw or a digital footprint so they can use that methodology to acquire new customers, and it's going to be an important part of developing and growing their business so they're not relying solely on referrals. I'll just echo those comments. This is a consumer issue, and it's a consumer perception issue. The good news is that depending on what the sales channel is, travel-based incentives are still going to be available through MGAs, where they're offering an array of products, and the consumer's interest can be looked after by the advisor, and that perception can be upheld. So the other area where it'll be able to continue will be for single company representation or career systems, where really the choice of products being offered by the advisor is from a single source. So the only area where we're seeing a change will be the manufacturers of products being able to offer direct to the advisor an opportunity to be involved in a travel incentive where there's a perceived conflict of interest. So these changes, I think, are appropriate, and it doesn't mean an end to it. It just means it's going to be changed a bit. My advice would be to develop your technical skills. The quality of your advice is going to be dependent on your ability to understand the products and services and provide financial planning advice to your customers. So develop your technical skills. That will see you through a lot of situations where clients really need help, and you're able to provide it.